are heading towards or are already in recession. So when times get tough, consumers cut back on spending as they try to survive the effects of a downturn. And while many businesses are having to cut costs and restructure, others are finding new opportunities in tough times.
Traditionally, retail businesses are among the first to feel the pinch in any downturn. But that's not the case for Abraham Hatoum. His string of 80 Looksmart clothing alteration stores are actually benefiting from consumers tightening their belts.
People are now doing, rather than buying new garments and shortening them, they are resorting to their wardrobes and adjusting or fixing their old garments.
There's been a 220% increase in the repairs side of the business over the last 6 months. The company has also adapted its marketing campaign to shifting consumer habits.
In our case, rather than spending on global advertising, for example, we just go locally and try to educate the households on our services in particular, and show them that we can save them money and they still can get the same result.
In Australia, consumer sentiment is hovering around its lowest level since the recession in the early 1990s. But AMP Capital's chief market economist Shane Oliver says that doesn't mean people won't treat themselves occasionally.
There is some evidence that as we go into a downturn, people still buy themselves luxuries. There's some evidence with women and jewellery that they'll still go out and buy a bit of jewellery now and then.
The same theory seems to apply when it comes to takeaway food. Gourmet pizza chain Crust says it's yet to feel the impact of any slowdown in the real economy.
There's a general sentiment out there that people would prefer to get a takeaway meal, a good quality takeaway meal at home, and perhaps a bottle of wine. That's the feedback we've been getting from our customers, and it has been evident in our sales because we haven't seen a dramatic slowdown.
For those relying on tourist dollars from Asia and Europe, a weak local currency is helping out. Opal retailer Bill Cudlip says while visitor numbers from the region may be down, those who are travelling are still keen to buy.
Our sales are up. Our sales in October were up 14% on a year ago. There's not many businesses can say that. We're having a very good month this month too.
Other businesses that are traditionally defensive in times of weak economic growth are food retailers, gaming companies and beer producers.
Some areas do well because people are trying to drown their sorrow, so to speak. The evidence would suggest that people shy away from top quality wine, but sales of beer often tend to go up.
And despite the silver lining for some business, Shane Oliver does expect the gloomy conditions to cast a shadow over the real economy for some time. He's tipping Australia could enter recession by the end of the year.
It's not just falling stock values that are hitting share market investors. They're also facing the prospect of slimmer dividends or none at all, and capital raising efforts as companies try to shore up their books. To look at the weak corporate environment and what it means for those with their money in the tumbling equity markets, I'm joined by Ron Bewley, Chief Investment Officer, Private Client Services, Commonwealth Bank. Good morning, Ron Bewley. We've seen a profit bonanza in Australia and the rest of the world over the last couple of years, but the tables have turned quickly this year, haven't they?
They have turned, but we've come from 17 good years, not just a couple, and we're in a very strong position at this point in time. And if you look at the profit announcements in February and August of this year, they more or less met expectations. And interestingly, the profit forecasts for next year aren't down by that much, maybe 9% to 14%. So although profits will fall, not by as much as some people I think are making out.
So you're saying investors shouldn't be that concerned then?
Investors in companies should be very concerned by day prices. They don't necessarily reflect the true value of a company. At the moment, basically prices are way out of line from company valuations. BHP is about 3 or 4 times earnings. That doesn't make sense really.
But would you say as the economy contracts, slimmer profit margins are eroding company bottom lines, so we're seeing falls in profits across all sectors though?
Different sectors are appearing to behave quite differently. The healthcare sector is doing particularly well compared to the others, and so is IT and consumer staples, the Woolworths, etc. Those sort of companies are not falling by as much because you always need the staples and you always need health.
Now, we're seeing financial services and banks, of course, in particular, they're posting very large drops in profit. Is that a reason for investors to sell out, or should they hold their positions then?
If the market is as undervalued as I think it is, selling out unless one has to isn't a good idea. And if you look at the possible future dividend payments compared to today's prices, it's much better than the alternative cash.
So long term, then, the financial sector is still quite a good one then.
There may be one. I'm talking about big companies, not little ones here. The big companies are big and strong in most sectors, if not all sectors, and being invested for the long term is always what we're meant to be doing. And if the dividends come through, you might be getting, say with the banks, maybe 8 or 9% after tax on the money that you've got invested at the moment. Whereas if you're in cash, you'll be lucky to get 3% next year, and then you pay tax on top of that.
Okay, now Macquarie Group is one of the big investment banks. We've seen it maintain its dividend. So how important is that in restoring or keeping investor confidence then?
Well, all companies try to maintain dividends, and the big banks have managed to do that for the last 15 years or so, increase every time, or at least not go down. So companies do try to maintain dividend payouts where they can, but of course there may be cases when some can't, and certainly it is a good sign that Macquarie could do that, and other companies will try to do the same.
Okay, now you mentioned that the health sector in particular was doing quite well in the face of this downturn. It's quite resilient. For a long time, the resources sector has also been looked upon as being the saving grace for the Australian domestic economy. How do you feel about it at the moment?
The resource sector, I think it's got a brilliant future. China is not going to go away. It may have 1 or 2 bad quarters, but it will be there in the long run. So we're going through teething problems in a long-run investment strategy rather than the end of resources as we know it. But again, one should always be careful of very small companies, but the big BHPs and Rios, they're here to stay, China's here to stay, and India won't be far behind.
All right, looking generally, we're seeing a lot of capital raising such as share sales. So what impact is this having on existing shareholders?
Well, it's very hard to work out what impact it has when share prices can move by 10% in a day for, say, BHP yesterday. One wouldn't know really what the impact of a share raising is. But say Sonic in the healthcare sector, that raised its money, in fact more than its money, very, very quickly, and then carried on it's battling ahead stronger now than it was before the raising. So I guess it depends on how much they need and how quickly they do it.
Now, Ron Bewley, we're nearly out of time, but I just want to ask you, we're seeing downgrades in profit forecasts. So when can we expect to see a turn-up in company results?
Company results won't turn up until the economy turns up, but the price of the company can turn up far more quickly. In almost every other downturn, the equity market prices move up far before the economy does, so the prices could start to move up as early as, say, February, but maybe the profits won't increase for a year or two.
All right, Ron Bewley, we'll have to leave it there, but thanks for your time today.
Thank you. Thank you, Whitney.
Australia is about to enter into another free trade agreement despite growing scepticism over their value. Chile already has a number of preferential trade deals and is looking to expand its export markets for commodities similar to Australia's. The deal comes ahead of this week's APEC meeting in Peru, where a renewed push for a multilateral approach to trade is expected to be high on the agenda.
Chile may seem a world away from Australia, but the two nations hope to move closer through trade. Australia will ratify a free trade agreement with Chile, a country considered the gateway to the Latin American market.
Obviously,